Hello, welcome back to Time is Money, presented by Option Monster. This show sponsored by Trade Monster, where you can trade options for just 50 cents, stocks for just $7.50. It's a sister company of Option Monster, folks. Encourage you to go on over and check out some of the tools at TradeMonster.com because they sponsor this weekly option show. Here's what went on in the options markets this week. Of course, very volatile week. We had a very strong downdraft on Thursday and then that V-shaped bottom. Classic capitulation on that day. Now, does that mean we won't ever test again down around that 78.80 level for the Dow? Of course it doesn't. We could test it at any given time. But the good news was that we did see so much money come piling in to everything that was down at that time. We saw it come piling in right at noon Central Time. They came in aggressively buying Goldman Sachs. They came in buying General Electric. In fact, General Electric gained some $21 billion in market cap, bouncing off the bottom that it put in down there at about 14.48, trading back up through 16. So very strong moves in the market. The VIX came down dramatically from a reading of just one tick below 70 yesterday to come all the way down and break through 60. Now, one thing that we will note for you, however, is the back months on volatility not coming down at all. More than just sticky, folks. People are aggressively buying those still. Why is that? Think about who the natural buyers of long-term options are. Places like insurance companies, because they have some sort of an equity with a kicker. They give you a fixed return of maybe 3–5% on these annuities and so forth, and then they have that upside kicker. That kicker is a call. No matter how you make it, somebody sold it to them. Natural sellers of that would be banks, and so those banks are now scrambling to cover this risk out in 2009 and 2010. We see that lifting the back end of the curve and holding volatilities at obscenely high levels, and until January comes around and they ring the bell for the first trading day of 2009, I think volatilities will stay unusually high because there's so much cash on the sidelines that will then get redeployed as cash comes out of Treasury and just plain banks and goes into various managed accounts, some of which will of course come into the stock market. As far as what's going on in our market for next week, let's take a look at Monday. All right, looking around, we always want to give you a look ahead, folks. So in other words, the way my mindset is, and Pete's and Guy Adami's, all the folks that are part of here from Option Monster, we're looking for unusual activity, and where do we know that activity might be lurking in the future? We know Lowe's, L-O-W, has earnings on Monday. So knowing that that event is out there and knowing that Lowe's is trading about $18.50, give or take a look at the December 17-20 bull call spread. That spread trading for in the range of $1.10, $1.20, we think is a cheap shot. We think you move the odds into your favor by buying a bull call spread at that level rather than buying the $18 stock. Think about it. You could put 1,000 share equivalent, which would be 10 option contracts on the table for $1.20. That would be a $1,200 investment. Contrast that with $18,500 to buy Lowe's ahead of that announcement next week. It's a lot more commitment and a lot more potential downside if Lowe's has a hiccup. On the other hand, if Lowe's moves up and trades 20 or better, the spread widens rather dramatically. It could go all the way out to $2.50 at expiration, which would be the differential between the 17.50 calls that we've purchased and the 20 calls that we've sold. So take a look at that. You might recall that last week on our Time is Money report, sponsored by Trade Monster, where you can trade options for just 50 cents and stocks for just $7.50. We told you about the unusual activity in Starbucks puts. If you take a look at a graph and see how that worked out, you'll be saying, I better watch Time is Money every week because that time really is money. Another stock to watch Monday also is Target. Target's trading below $34 a share, right around $33.75, and the December 35-37 call spread trading for, again, about $1.10. So this is once again a 2.5-point spread. We're buying the December 35 calls, selling the December 37 calls. Why are we doing this in two of these retailers, in Lowe's and in Target? Because we think they've been hit so hard, folks, and the guidance already lowered so significantly that they may have some positive guidance here. Not positive as far as the world's getting brighter, folks, it's all going to be okay. Nope, but better than some of the very pessimistic outlook that is out there. So we're taking a limited risk shot, $1.10, which on a 10-lot position is $1,100. We think that's a prudent way to play for an upside exposure in target. Again, December 35, 37 bull call spread. Spinning ahead to Wednesday, we've got Intuit and a whole lot of course, tax planning. If you don't think that under the new administration, and this is no slam on Barack, but if you don't think under the new administration taxes are going to change, then I got some news for you. They are going to change. And people that have tax preparation programs will need to update those. Many of those, of course, charge a little fee for that update. Many others will need to avail themselves of a tax program. Intuit makes the most popular tax program on the market, and the shares all the way down to this level, I think, make them a very cheap shot. Take a look at Intuit. Lastly, I'm going to leave you with a stock that has earnings on Thursday next week, Autodesk ADSK. Autodesk is CAD/CAM design programs for architects and so forth. I think that you can buy 10% downside protection without spending any money. If you own the stock, if you sell the at-the-money calls, the 20 calls right now, you're protecting yourself to a 10% downside move. Normally, those at-the-money calls would only protect you for about 6%. So you can see that that added pump in volatility is good for you if you're an option investor. You can take advantage of that by, instead of buying them, become the house. I own the stock, I sell those calls, I protect myself against a 10% drawdown to the downside. As far as Limited Brands LTD, December 10 spread, the 10-12.5 spread, right around 30 cents is where that spread is trading. 30 cents, folks. That means a 10-lot spread is 300 bucks. If Limited has anything positive about how sales have gone so far and how they're going, what kind of promotions they're running to get more people online with the catalogs and in the stores, well, I think they could surprise. The shares are all the way down now to $9.20. They were $22 in September, so I think this one's plenty cheap. So we've given you a lot to think about today. Told you about volatility and told you that I believe volatility stays where it is in a range, but on the high end of the range till the new year when new capital comes into the markets. We told you that banks are the natural sellers. They've been squeezed now and they're having to buy back some of those calls, and that's kept the volatility higher in the out months. Another thing you should make note of. And then we told you about a few stocks that have earnings this coming week. Told you about Lowe's, Target on Monday, Intuit on Wednesday, and then Thursday we've got Autodesk and Limited Brands. I'm Dr. J from OptionMonster.com. Remember, the only place where you can get information like this that's actionable is right here on OptionMonster.com. Throughout the day we track unusual activity. Computers you see behind you here and a lot of the systems we use to track 100,000 quotes per second. How else could you see it all, folks? The human eye can't see it. It takes computers like that to see it, and then we break it down for you. We want to thank our sister company, TradeMonster, for sponsoring this show. If you like Time is Money, make sure you send us some information, some feedback, if you will, because we know we can make the show better if we get that feedback from you, and I'll look for you back here again next week. I'm Dr. J from OptionMonster.com.
I'm not loving you way I want.